What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering a highly requested stock, and that is the Paysafe stock. This is a very unique company that you have to do a in-depth analysis to really understand. That's what we're going to be doing here today, and I believe this company has massive upside potential. And only if you feel this video gives you a better insight on the Paysafe stock, be sure to subscribe to the channel. I'll be keeping you updated daily with all of the growth stocks and spec plays. There's gonna be a lot of great information coming out. You don't want to miss it. Let's get into the video. So, guys, Paysafe is one of those stocks that has just been left in the dust for 2021. This company has a absolutely phenomenal valuation compared to these other growth stocks. Yes, the growth in this company is not as high growth as some of these early stage companies like I've been going over, with AvePoint, Open Door, SoFi, but this company is in a different point in time. Paysafe is a very large company with massive profit potential. You can see here that Paysafe has hit a high of almost $20, back in early February, and has sold off all the way under $10 and is now at $10.70. Guys, if you look at the chart, this has been a 6-month sell-off. Guys, we're going to be covering their last earnings report because I still have not done that, but we can see right now that there is 5 buy ratings with 0 sells and 0 holds. Analysts are recommending a strong buy at this company close to $16, which is near 47% upside potential from the stock price right now. Guys, this is off a decent earnings report, okay? Mediocre earnings, okay? And they're still recommending this as a strong buy, guys. I believe in the next 1 to 2 quarters, we're going to see much stronger earnings because this company has made big moves back in 2020 that they are now going to lap in the next coming quarters. Guys, just look at what the big money is doing, okay? These big, whales out there, these big hedge funds. Meza Salma Advisors LLC buys 139,000 shares of Paysafe Limited. Guys, this was July 28th. This is literally 2 weeks before earnings comes out. These are big buys that are getting shown. This was valued around $2 million. Okay, it's a pretty good buy, from a, small LLC out there. This is their 24th biggest position in the holding. Guys, it continues. Just 2 weeks ago, Steven Capital Advisors LP takes position in Paysafe Limited. The firm bought 1 million shares of the company's stock, valued around $13.7 million, making up the 27th largest position of the holding. Right around the same time, 2 weeks ago, 1.7 million shares acquired by Honeycomb Asset Management LP, valued around $23.4 million. Paysafe makes approximately 1.4% of Honeycomb Asset Management holdings, the 27th largest holding. So, guys, big hedge funds, big institutions are loading up this stock heading into the second earnings report for 2021. What does that tell you, guys? What is that saying? It's saying that this company right now has massive upside potential. And I'm going to show you. I don't just buy the stock, going off of these, institutional and big money investors. I do my research and due diligence. And that's what I'm going to show you here today, why this company is so undervalued compared to other growth stocks in the payment, sports betting, transaction sector. Going on to Paysafe's website and looking at their 2021 Q1 results, they did reaffirm their entire 2021 outlook, okay? So they do expect the year to be positive compared to 2020. And I want you to know, 2020, they really took a hit, in the beginning of the year with, all those sports, getting closed down. So the first quarter 2021 financial highlights: revenue of 377.4 million, increased by 5% from 2020, okay? So not a big significant increase in revenue growth at all. But the good news is, as you can see here, they give a summary and they said revenue performance also reflects The impact of actions taken in 2020 to improve the company's overall risk reward profile in certain markets and channels, which had an unfavorable impact on year over year growth. Okay, so that's exactly what happened. Okay, there was business channels and markets that they exited that they're going to eventually lap in Q2, Q3, and Q4. And you can see right here there are three main line of revenue streams: integrated processing, digital wallet, and e-cash solutions. Okay, the integrated processing took a negative 5% hit. The digital wallet took a negative 13% hit, and these are because of those business transactions that they exited last year in 2020, and they are now focusing on that iGaming, is what I've been continuously talking about every time I talk about Paysafe, and that's the e-cash solutions. Revenue is up 63% in this segment, and this is the segment that they are really targeting very heavy for the next 1, 2, 3, 4, 5 years. EBITDA in the eCash solutions was up 110%. This is where the bread and butter is going to be won in this Paysafe stock. Guys, the U.S. iGaming today is in such an early stage. iGaming is only live in 14 states, but Paysafe is connected to 75% of the operators. So guys, imagine where this company could really be headed when all of these states are eventually unlocked in the next 2, 3 years. This company could surge. They are heavy in iGaming right now. And I keep explaining to people how profitable this company really is. Strong and expanding adjusted EBITDA margin, okay? Their margins are absolutely wonderful. You can see right here, the past 4 or 5 years, they've been in that 30% margin. In 2020, they expect 32% margin. And guys, take a look at this EBITDA, okay? 426 in 2020. They now expect near 480 to $495 million in EBITDA, okay? To give you guys an understanding of companies in different stages, okay? This is SoFi, okay? This is their revenue and EBITDA, okay? You can see right here, SoFi's EBITDA has been negative for the past 3 years. They are beginning to go positive this year, 27 million. 254 million in 2022, and then 2023 is where they get on Paysafe's level, okay, about that 480 million in EBITDA, okay? So as you can see, as far as profitability, Paysafe is, 2.5 years ahead of SoFi. It's just SoFi is an early stage growth stock growing at a much higher rate. You can see right here, at that 50 and 40% growth rate the next 3 years. So that's what happens in these early stage growth stocks. They get, ground built early, and then they level off. As you can see, the level off happens here at 30%. That's why I'm so bullish on SoFi, because they will eventually end up passing, Paysafe stock as far as, revenue and EBITDA in 2024. It's just right now, what I like about Paysafe is the valuation, and that's what we're going to look at next. So you can see right here, another company in the payment processing business, PayPal, which has been on a massive run, the past, 1 to 2 years. And you can see their revenue growth is sitting right around that 18%, that 15%, that 20%, that 25%. Okay, so we can give them a very solid ballpark, the last, we'll go with 3 years, we'll give them 20% growth. Okay, that is very solid. Okay, and we're going to show you the price to sales that we're always going over, with SoFi. Price to sales is very key. Okay, so I have a couple companies pulled up right here, okay, just to give you guys similar valuations and comparisons. PayPal is the big, neck and neck, payment processing, competitor. But I threw in other two types of growth stocks. Okay, so PayPal is valued right now at about 15 times sales. Okay, they're projected to do $24 billion in revenue. Much larger company, than Paysafe and the other ones. 20% growth, year over year for the past 3 years. 360 billion market cap. Okay, so this 15x sales is much lower than these other stocks, like Lemonade, valued at 54x sales, a very highly valued stock that I would not touch. Literally the same growth as PayPal right now. So guys, this is what I'm talking about. Overvalued companies in the market you have to be very cautious for. Palantir, 33x sales, a little bit higher growth. 30% growth they're projecting the next 3, 4 years. So you guys can see the valuations on similar growth stocks, 33x and 54x. Paysafe is valued at 5x sales right now. 7 billion market cap on 1.5 billion in revenue, okay? Yes, the growth projection for the next 2, 3 years is 10% growth. I'm telling you right now, if that iGaming sector explodes, that's really where they are targeting. But what I really think they're trying to do right now is underpromise and over deliver. If this company gets into that 15, 20% growth stage, over these next couple of quarters, possibly, 15%, 20%, like PayPal, as we saw in their first quarter for Paysafe, 5% growth, not very good at all. But if they move into that 15, 20% after they lap, that 2020, business exits, that's what I'm looking for Paysafe, guys. I'm just looking for that 15 to 20% growth, in 2022, the end of 2021. This sales valuation literally gives you, almost 200 to 300% upside on the price right now just to get at a, valuation of PayPal, guys. So this company right now is valued at one of the cheapest valuations inside of the market, in an untapped market right now, guys. So it's very different from another stock that I've been talking about, SoFi. SoFi has that high revenue growth of 50 to 60%, can get to that higher valuation of 30, 40x like Lemonade and Palantir. But we don't need that for Paysafe. We just need Paysafe to get to like a 10, 15, 20x valuation in the future to make a lot of money. As you're seeing with these analysts right now, already giving it, 50% upside, off that last earnings report. I'm telling you, if they have a blowout earnings report, this stock could easily surge, to $20, $25 by the end of the year. And guys, we know that SPAC stocks have a bad taste, bad headlines, SPAC stocks are not recommended because there was an influx of over 500 SPAC stocks. This is like the cream of the crop when you're talking about path to profitability, undervalued market, a market segment that is growing in the sports betting sector. And really do you see SPAC stocks pop up on Motley Fool, guys? You can see right here, Motley Fool is given Paysafe, another headline. This is very good, very early stage leading up to a good earnings report. Two growth stocks to buy for the next decade. Paysafe went public late March with Foley Trasimene 2, a special purpose acquisition company. It's a payments company based in London that does most of its business outside of the US, but with rapid growth in online gambling, that might be about to change. Paysafe owns well-known brands like Skrill, a digital wallet provider that recently expanded into cryptocurrency and NetTeller, which is used to transfer money between consumers and merchants. Skrill recently announced a partnership with Coinbase Global, a massive, massive company, which is offering a white label solution to Skrill that allows its customers to buy and sell different cryptocurrencies. The Skrill wallet has an option to set the base currency in either US dollar or Bitcoin. The company's digital wallet and eCash segments comprise 55% of total revenue in the first quarter. That's what I was talking about. That is the segment that they are really trying to tackle for the next couple of years. Paysafe's overall revenue of $377 million in the first quarter represented just 5% growth compared to the same period last year, but there's a strong driver emerging in U.S. expansion, the iGaming segment in America alone, which is active in only 15 states, grew by 66%. Bill Foley did explain that they reviewed over 100 companies before going with Paysafe, and we know that, Bill Foley, an older time investor, his business model to grow these companies has always been under promising and over deliver. So yes, they are projecting 10%, revenue growth the next 2, 3 years. But I'm telling you, if that iGaming segment explodes, we could see 15 to 20% growth on a company undervalued like Paysafe at 5x sales. It gives you massive, massive growth potential, guys. And that's why we're seeing these multi-billionaire investors, Daniel Loeb, load up on this stock, early stage, months ago. If you made it to the end of the video, I want to say I really do appreciate it. I enjoyed doing this video for you. Paysafe is way ahead of the game in terms of EBITDA, 2, 3, 4 years compared to these other early SPAC stocks. Paysafe, as you can see on its price to sales multiple, is literally the lowest in the entire market as far as, untapped markets and growth stocks at 5x sales. We're seeing companies trading at 50, 60, 70, 80x sales. Multi-billionaire investors are secretly loading up on this stock the past 6 months. This is because of the untapped market and that U.S. iGaming segment. That iGaming sector is exactly what Paysafe has adjusted the entire company on tackling. And if you feel this video gave you any better insight on the Paysafe stock, be sure to subscribe to the channel. I'll be keeping you updated daily with all of the growth stocks and spec plays. There's going to be a lot of great information coming out. You don't want to miss it. I hope you have a great day.